So one of the biggest debates in AI right now is whether or not AI is in a bubble. Let's talk about this. So why am I making this video now when Sam Altman actually spoke about this back in August of 2015? Well, number one, I actually was meant to do it back then, but I had some delays. But it was a happy coincidence because so much more information has come out since then that I'm actually starting to change my opinion on the AI bubble. So if you aren't familiar with this entire premise of what the AI bubble is, of course, I have to give you that premise. So essentially, Sam Altman is basically saying that the entire AI sphere as it is in the current moment is in a bubble. And he basically means that, current valuations for companies are disconnected from how much they should really be worth. Now, you might be thinking, and this is what I was thinking as well, why on earth would Sam Altman even say this? If he's the CEO of OpenAI, and if he is essentially the CEO of one of the companies that I don't want to say thrives on hype, but it certainly benefits them as they are the market leader, why would he sort of, put water on his own fire? And I'm not sure for the reasoning of this, but I do have to say that this is probably an honest statement. And the answer to like all of this AI bubble or not, it is a bit more nuanced than yes, we are in an AI bubble than to just no, we are not. Because I've actually watched several different videos, watched several different interviews, and my information is pretty different because I was even having multiple different conversations about different companies, how much they were raising, how much they're investing. But let's get into some things that I personally noticed. So one of the things that I personally noticed, okay, and something that a lot of people within the AI industry did notice was the fact that this company, okay, called Thinking Machines, is possibly overvalued. And I'm not saying that to mean it's not still a valuable company, but let me give you the basis of why, people are talking about the AI bubble in the first place. So Mira Murati, who is the former chief technology officer from OpenAI, said on Tuesday that her AI startup, Thinking Machines, raised $2 billion, billion with a B, in fresh capital and will announce its first product in the next couple of months. And this is, of course, the person who was the interim CEO after Sam Altman was briefly ousted by the company's board. So this is someone, who is very high up in OpenAI. They essentially left, okay, and they went to start their own company. Now remember, this is a company that has no product, okay? It doesn't mean that the CEO isn't going to do some amazing things, but we have to think just how crazy the investor sentiment is if someone is able to raise $2 billion without any existing products, no current revenue lines. I mean, that pitch deck is probably amazing, but you have to understand all of that entire valuation is coming from her track record as an individual, from being in very, very prestigious companies that have done remarkably well over the past few years. And so the reason that people are saying that, look, this is pretty crazy is because, like, whilst yes, tech companies have had notoriously big valuations, it isn't normal for someone to just get $2 billion to build a new AI company that's going to announce their product in the next couple of months. Now, we need to look at something else that, just really puts things into even a crazier perspective. So let's take a look at SSI, Safe Superintelligence Inc. And this is an AI startup led by OpenAI's co-founder and former chief scientist Ilya Sutskever. They've raised an additional $2 billion in funding at a $32 billion valuation, according to the Financial Times. Can you imagine, guys? This company, okay, Safe Superintelligence, has raised over, $2 billion in funding at a $32 billion combination. That means that, this guy made a company, clicked his fingers, made a company, obviously not clicked his fingers, made a company, but like made a company, okay? And now it's valued at $32 billion, okay? And this is pretty crazy because you have to understand that, like, this is not normal at all. This valuation of $32 billion, that is a huge amount, you have to understand that, like, I think unicorn status refers to a privately held startup with a valuation of over $1 billion. And I mean, that's pretty crazy because they're just, a unicorn almost immediately. So I think this is something that is really surprising, because what we are looking at here is the fact that when we do take a look at this valuation, we have to think, is it justified? And I mean, on one hand, I would argue that it kind of is, because what most people don't understand about superintelligence is that if you lose superintelligence, the exponential growth that occurs after that is unfathomable, okay? And I know that might be quite hard to imagine because humans, we don't really conceptualize just how crazy, exponential growth is. Compounding is like the 8th wonder of the world. I don't remember where that quote is, but like it's very, very hard to imagine how crazy it is if a company manages to achieve superintelligence. So you have to understand that safe superintelligence being started by Ilya Sutskever, everyone would try to invest in that company because they're presuming that if they can achieve, superintelligence based on the fact that they may have made some incredible breakthroughs. And of course, he led a lot of the breakthroughs at OpenAI. A lot of investors are going to be like, well, this is going to be absolutely crazy. Now, on one side, you have people saying that, look, if they achieve superintelligence, they can basically do really any product. They can really, the applications are basically endless. But on the other side, you have people saying that, wait a minute, these companies don't create any value just yet, and the valuations are sky high. Who is going to continue to fund this? Now, we've also got other people stating that, other companies are already crumbling into chaos. If you aren't familiar, Meta is a company that has spent billions and billions and billions of dollars on hiring different AI researchers to come and work for his company. And in recent, clips, there is a clip of Mark Zuckerberg, and he basically explains his thesis, okay? And I actually agree with this thesis, okay? He basically says, right, that the price of superintelligence, missing out on those returns are essentially too high. What he means by that is that, like, if you, and I said this at the start of the video, if you miss out on the next wave of AI, the price that you pay for missing out rather than losing on the gains is too high of a price, because superintelligence, in theory, is something that compounds and builds on itself, and it's like this runaway technology that could have crazy exponential gains. So superintelligence that, produces smarter AI, builds on itself, that creates even smarter AI, and of course, more products and services, just basically a continuing cycle. So obviously, look at this clip, because this is kind of like the backbone of how some investors are essentially thinking, and nobody wants to miss out.
Out of the way, and that's kind of my job for them.
Yeah, you were talking about the CapEx and the data centers. You obviously see something on the other side of that will warrant that being worth it. But I'm wondering, do you ascribe to these bubble fears at all that people are talking about, that we're in this massive overspending, getting ahead of the skis bubble, and maybe a company like Meta will be okay because you guys do have a core business that makes a lot of money, but
yeah,
how do you think about this bubble talk that has been going on for the last few months, especially?
I think it's quite possible. I think basically if you look at most other major infrastructure build-ups in history, whether it's railroads or fiber for the internet, in the Dotcom bubble, these things were all chasing something that ended up being fundamentally very valuable. In most cases, it ended up being even more valuable than the people who were kind of pushing the bubble thought it was going to be.
Right.
But in at least all of these past cases, the infrastructure gets built out, people take on too much debt, and then you hit some blip, whether it's some macroeconomic thing, or maybe you just have like a couple of years where the demand for the product doesn't quite materialize. And then a lot of the companies end up going out of business. And then the assets get distressed, and then it's a great opportunity to go buy more. So I think that it's obviously impossible to predict what will happen here. There are compelling arguments for why AI could be an outlier, and basically just, if the models keep on growing in capability year over year and demand keeps growing, then maybe there is no collapse or something. But I do think that there's definitely a possibility, at least empirically based on past large infrastructure buildouts and how they led to bubbles, that something like that would happen here.
And you can see here, he says, of course, the AI bubble is possible, but the risk of misspending a couple $100 billion, then miss superintelligence, of course, he doesn't want to do that. And, he put $600 billion on US data centers and infrastructure throughout 2028. So you have to understand that this data center build out, these, pledges of billions and billions of dollars is really, really there. And I think people don't understand there as well, that a lot of these, companies, I'm pretty sure the government is probably working on some kind of Manhattan project by now, but they're, like Project Stargate and the government, they are spending billions and billions of dollars so that they can beat any foreign adversary as well. So you have to understand that there is also that aspect to it. Now, we have to understand as well, this is one of the biggest things when it comes to the AI bubble. And this is something that I'm honestly 50-50 on, okay? Because on one side, I understand where they're coming from. And this is the point of, does the tech even work, okay? So one of the things that a lot of people talk about is, does the tech in AI actually work? Is it actually good, and is it actually justified? Because this report here says 95% of generative AI pilots at companies are essentially failing. So basically, this was a report where basically MIT revealed that despite tens of billions of dollars invested in generative AI, the majority of business initiatives are yielding little to no financial return. Only 5% of integrated AI pilot programs are making a measurable profit impact. And these MIT, findings were like stock market jitters. Now, I think the thing that you have to know here is that this study wasn't essentially the very best, because if there's one thing that you need to understand, okay, and that is that this study and headlines, they impact anything. Like if people say, oh, 95% of generative AI pilots companies are failing, you have to understand that the majority of people aren't going to read the article, read how they studied it, read how they collected the data. They're just going to say, wow, this AI thing is no longer as good as we made it seem. And so this study does have its weaknesses because it was based on just 52 interviews, 150 surveys, and reviews of 300 public company announcements. And success was defined only if firms publicly reported sustained profit and loss or productivity impact, essentially equating no press release with failure. And this makes it a bit unreliable as a broad industry measure. And headlines twisted the finding into AI isn't useful when the actually study suggested that organizational pilots aren't showing results at a company level. And the report itself actually shows that AI is actually delivering value, just often at the individual employee level rather than showing up in those corporate reports, So it's not that crazy, this report, honestly, but I'm not going to say that AI doesn't have its issues. It is, of course, a system that is non-deterministic. It's generative. Every response is, really different. And in the business world, you kind of want systems that are going to be 100% reliable so you can have broader market implications. Now, how does this relate to the bubble? Of course, if you're rolling out and spending billions and billions of dollars on this Gen AI technology, you have to think that, well, hopefully this stuff would work. But one thing that I always want you guys to remember as this video continues to go on is that when I say AI does not equal LLMs. A lot of people just think AI equals LLMs. That is not the case. AI is absolutely everything in AI and robotics, AI self-driverless cars, like everything that there is to AI. And when you actually think about that entire market share, I would say that the technology itself, when you understand that even the AI that brought you to watching this video, all of those algorithms there are still AI. And you have to understand that most people, when they think of AI, they just think of ChatGPT. So you have to understand there is a small disconnect there. So also, a lot of people are saying that there is an AI winter. I think this scenario is pretty decent. So this person on Twitter said that my baseline case is that AI being built right now is overrated. Soon it will be a disappointment. Then it will be a bubble. And by the 2030s, it will be world changing. Self-driving cars are a model for this. In 2015, and I remember this, I heard autonomy was 5 years away from taking over the roads. In 2020, they were nowhere. And even in 2022, you could say they were a huge disappointment. And right now, they are quietly a revolution. Driverless taxi usage in California grew 8 times in 1 year, and Waymo is expanding to other cities. And this is the chart that actually shows this. So essentially, it's that like hype cycle where initially there's a huge burst of hype. Everyone thinks it's the next big thing. Then there's the trial of disillusionment where the reality of the technology sets in. And then eventually the companies that have endured that, they mature and they move through. Now, there is still a lot more to get through, okay? Because of course, one of the things that, if we're talking about, like one of the biggest things is, of course, once again, if I, reference the previous point, was another report as well, was that Goldman Sachs was saying that AI is too expensive and unreliable, and firms asked if, overhyped AI. Basically, Goldman Sachs is one of the biggest banks in the world, and they are openly skeptical about generative AI. And the core finding was that there's been huge spending on AI infrastructure, but there's been little to show for it. And they question whether this massive investment will ever pay off. And of course, remember, like if we're talking about bubble, it's mainly about like stocks and valuations of companies. And that means that Nvidia, big tech stocks, are priced as if AI will boost productivity and those profits. But we have to remember now that those are already baked into valuations, raising the risks that investors are currently overpaying. And this article basically says generative AI is unreliable, also expensive. Simple summarizations can sometimes produce nonsense. Goldman Sachs tested it internally and updating models where the AI costs 6 times more than doing it manually. And current LLMs aren't designed to solve complex problems, and scaling data further may not help. And they compared the AI arms race to VR. And like I said, I think they're not viewing this in the right lens. I'm not going to say that I'm smarter than the Goldman Sachs, but if we just take a look at the broad entire ecosystem of absolutely everything AI, not just generative AI, I think all of those investments, once there are a few key breakthroughs, the world will change rapidly. I really do believe that. Maybe I'm completely wrong. Maybe yes, companies are a bit frothy and they're a bit overvalued, but I still do believe that provided the companies can weather the storm, there will continually be this exponential growth sometime in the near future. Now, one thing that I do want to talk about, and one thing that a lot of people that I'm seeing in interviews and a lot of people are starting to really point out, is that there is an extraordinarily high cash burn rate. One of the things that you have to know is that tech companies, it is pretty normal for them to burn billions of dollars, well, maybe not billions, but millions of dollars, with the hopes that eventually the company becomes profitable. And one of those things that we're looking at right now is Musk's XAI. This article is just like commonly being cited as, oh, we're in such a bubble. And it shows that Musk's XAI burns through $1 billion in a month as the costs pile up. So, you know, this company is spending money like crazy because remember, they have to train these models. It is very expensive because of the chips, the servers, the giant data centers. Other companies, they rent computing power, but Elon Musk actually currently, he's buying that infrastructure outright. And Musk wants to use, you know, Twitter's data to train the models, which could save money compared to paying for outside data sets. And he does say in this article, which is referencing, you know, a bunch of different things, that XAI will be profitable by 2027. And the investors keep throwing money. And apparently this company is valued at $80 billion because Elon Musk, you know, he does have a solid track record. Tesla, SpaceX, they burned billions of dollars before, you know, becoming successful. But people are saying that this company, the valuations and burning this much money is still a huge amount compared to other companies. Now, I want you to take a look at this clip where essentially Ed Zitron in this interview is essentially saying that there is not enough VC funding to keep things going. And I think he's kind of got a point here. I don't know if VCs will continually throw billions and billions of dollars. At some point, maybe the investor sentiment may change. But I do want to preface this with an anecdote that Ed Zitron has been noticeably critical of AI in the past. There have been previous interviews, so do bear that in mind when you do watch this clip. But I do think he does make a good point here.
The answer is there is literally not enough venture capital to fund this. Venture capital will run out. All of it, the dry powder of available venture capital will run out in 6 quarters at this current rate. And OpenAI, to do anything close to what they need to do, will need more than is currently available. Even if they move into private credit, it will not be sufficient. So the answer is, there's a good chance that OpenAI just does not convert to a for-profit entity. And if they don't by the end of the year, their current funding round from SoftBank gets cut in half. If they can't convert at all, they will die because they cannot go public. And at that point, if OpenAI cannot go public, they turn into a functional Ponzi scheme, where the only way for any investor to cash out is for other investors to enter the system. And this is not an accusation of fraud or anything. That's just how it will work if they can't convert, because they are this weird non-profit hybrid. So yeah, I think sometime in the next year or two, OpenAI simply falls over and dies and gets pecked to death by carrion birds. And once that happens, everything else falls apart because OpenAI represents pretty much all of the revenue. They make more than everyone else combined. There's probably $40 billion of active revenue in generative AI, which is nothing. And OpenAI represents, I think, like a third to a half of that. They represent all of the compute. They're most of Microsoft's compute. They're going to be most of Oracle's revenue, if any of that was true. OpenAI disappears. There's not that much business here. It's a fugazi. It's all made up. It's genuinely disgusting.
And so yeah, I don't think I'd go as far as to say that it's genuinely disgusting, it's all a fugazi. I do think that the tech has, you know, impacted a lot of people. I think ChatGPT usage is real. I think the company could easily be profitable if they stopped training models. But of course, that is the preface when you're trying to advance AI development. Now, of course, once again, it wouldn't be a video without discussing the weaknesses of AI without mentioning the Gary Marcus. So Gary Marcus, in this take from Fortune, he's essentially been warning since 2019 that large language models are overhyped and are hitting a wall. GPT-5 essentially proved, quote unquote, his point. It's decent, but it's not AGI and nowhere near the quantum leap that people expected. He says that the AI market is irrational and, you know, like and that valuations don't add up. There are hundreds of AI unicorns combined together. Those AI unicorns are worth $2.7 trillion, but the whole sector only brings in maybe around $25 billion worth of revenue. And the bubble is inflated because people anthropomorphize LLMs. They treat them as us human-like thinkers when they are just apparently probabilistic text generators. And like he says, it's almost tragic. People project intelligence onto machines that don't actually work like us. And investors are pouring trillions of dollars into that misunderstanding. So in short, what Gary Marcus thinks is that AI hype is unsustainable, and GPT-5's quote-unquote failure/flop is waking people up, and this is the proof that people are marking flashy outputs for real intelligence. Now, I have to say, Gary Marcus isn't just like an AI critic. He's someone who successfully sold his AI company to Uber. I can't remember what year it was, but he actually did that. So his takes, for the most part, I think they are good in some areas, but he does have some takes that aren't the best. But I do think that this take right here is not a bad one, because I do think that people do anthropomorphize these LLMs, but we do have to remember that we're still in the early stages of understanding what these models are. We don't really understand the black boxes. Anthropic has hired people to, dig in to see if these models are kind of conscious. And of course, these companies are still growing in user base, and they're still growing in the amount of adoption. And I still believe that current Gen AI is more so sort of a product problem rather than an intelligence one. And we still have a lot of gains to make, even if it's not just LLMs. There are still so many different companies out there working on a variety of different architectures. Now, one of the things that I wanted to talk about as well is the fact that this could be a good thing, okay? And before you have a crazy reaction, just hear me out when I say this. So basically, right, I came across this article. I'll leave a link to it. I don't remember who wrote this article, but it was a really good article, like a really, really good article. And this article essentially argues that if the AI bubble bursts, this would actually be a really, really good thing, because this basically means that what will happen is that it would essentially drive out companies that are useless. He says that, executives and investors are hyping up the idea that AGI demanding trillions in funding, despite the clear limitations of the current models, which are advancedly, essentially text mimics. This hype drives massive, apparently wasteful spending in billions of dollars with little return, while there are more urgent real-world problems that are being neglected. There is also technical progress that is slowing the new generations of models. The costs are exponentially more, but delivers only marginal improvements, showing the limits of scaling better models. He also talks about the collapse of the AI bubble would be so beneficial because, and this is where the main point is that it would clear out the hype-driven companies while leaving behind the valuable infrastructure and open source tools. And this would shift the industry towards smaller, efficient teams building practical and profitable applications rather than chasing the pipe dream of AGI. Ultimately, a crash would purify the field, ending unsustainable speculation, rewarding real problem solving, and allowing AI to become a useful tool, not a promised path to salvation or the apocalypse. And I'm going to read some of this verbatim. He says, "This is why the collapse of the AI bubble, a great and painful popping sound heard around the world, would be the best thing ever to happen to actual AI development. We've seen this movie before with the dot-com crash, where the speculative money vanished in 2000. The internet did not die, the zombie corns with no business models did, and what was left behind was a treasure trove of valuable infrastructure, from fiber optic lines to data centers, all suddenly available at a fire sale. The newly affordable foundation is what allowed the real sustainable internet giants to emerge, and a burst for the AI bubble to do the same. The open source models, the software frameworks, the research papers would all still be there. The wreckage of the boom would be the building materials for a more sober and sustainable future. Apparently, post-bubble would reward a different kind of engineer and a different kind of company. The goal would shift from building a god in a box to solving a specific problem for a specific customer, with the cost of entry lowered by the infrastructure fire sale. Smaller, nimbler teams could compete." Now, of course, if we get into like the financy side of things, I'm not going to dive too much into the graphy side of things, but of course, some people are going to state that this isn't a bubble. If we're talking once again about the 2000s, some people are like the 2000s saw decoupling from prices and earnings, which is where companies like Cisco had huge prices but not a lot of earnings. And they use this as an example, comparing it to Nvidia, where Nvidia's price has constantly gone up, but their earnings have also constantly gone up. So apparently that means it's not a bubble. So of course, this critical difference in fundamentals could potentially be true. You know, where there were profitless .com companies, today AI leaders often have substantial cash reserve and established revenue streams. So I think in Nvidia's case, maybe, yes, this is probably one of the best examples that it's not a bubble, but how many companies out there don't have good revenue streams and are valued at like 10 times their earnings or like 20 times or 30 times their earnings? I think when we look at the froth of the bubble, those are going to be the companies that you ideally want to steer clear of. Like, for example, companies like Google, in terms of AI progress, we know that like their valuation, I don't think it's, you know, completely baked in, but I think that like companies where they're, you know, are purely speculative and they don't have massive amounts of revenue on them, of course people are taking a huge gamble, because in order for companies to actually be successful for the long term, at some point they will have to bring in some kind of revenue. And I do remember seeing this chart on the AI versus the .com bubble. This was basically showing the 1999 crash to, you know, what stock prices are today. And honestly, these companies like Microsoft, you know, Bitcoin, Meta, it does look a little bit similar. I'm not gonna lie to you guys, there are some similarities there. But one thing that I will say, okay, is that we have to remember that AI is a lot more than Gen AI, okay? And if this does happen, you have to remember that the application is going to be insane. Like companies like Figure Robotics, they're building these robots with advanced AI in them, and the total addressable market for these products is absolutely incredible. And of course, they don't have major significant revenue streams yet, but just because they don't, can you imagine how many people would purchase one of these if they were affordable? How many companies would replace their workers with these? I mean, it's pretty crazy. And one of the things I want to state is that just because it can't now doesn't mean it won't ever in the future. A lot of people say that it's unreliable, it's useless, it can't do this, but the day that it does become profitable, I think that's where a lot of people are just trying to hold on because they don't want to miss out. And as we look to the future with future predictions, we got David Shapiro here with his graph on the, you know, future of model autonomy, basically showing how much models are improving with a log scale forecast to 2030. And also, if you remember this AI 2027 document, it basically shows us where and how quickly AI will, you know, move in terms of the development in the next couple of years. So me personally, I would say that yes, AI is Thor 3. It's a bit of a bubble. Companies that don't have any sort of revenue streams, that are disconnected from their earnings and their stock valuations, yes, those ones carry high significant risk. But if those companies can actually pull it off, then of course those valuations are probably going to be justified. I mean, how much do you value a company that's able to achieve super intelligence? I mean, what is that company valued at? Like $1 trillion, $2 trillion, 10 trillion? I mean, is it, you know, a small portion of the economy if it can do the entire economy's tasks? Those are the questions and the kind of crazy valuations people have to think about. I'm not going to get into the economics of things, but I do think, yes, there is a slight overvaluation on some companies, but other companies, I do think they'll pull through, and I do think they will still be here, just like the 1999, 2000s .com crash, where companies, their valuations came back down to reality. But I still believe that those companies will be here maybe 10 to 15 years from now. Let me know what you guys think. This one was super interesting, and I will see you all in the next video.